Good morning, everyone. Today, our group will be presenting on the restructuring of Airasia Group Berhad into Capital A Berhad. Airasia Group Berhad was established in 2001 and grew into one of Asia's leading low-cost airlines by offering affordable air travel across Southeast Asia and other international destinations. Besides its airline operations, the company gradually expanded into other businesses such as logistics, digital platforms, financial technologies, and travel services, creating a broader travel and lifestyles ecosystem. In January 2022, Airasia Group officially changed its name to Capital A Berhad as part of a major corporate restructuring strategy. This decision was largely driven by the severe financial impact of the COVID-19 pandemic, which significantly affected the aviation industry. The restructuring reorganized the company aviations and non-aviations business under a diversified holding company structures, including Airasia Aviations, Airasia Move, Teleport, BigPay, and Sunfly. Since this exercise involved organizing existing subsidiaries rather than acquiring another company, it is classified as an internal corporate restructuring. The main objective was to reduce dependence on airline revenue, improve operational efficiency, diversify income source, and create long-term shareholder value while positioning the company for sustainable future growth.
The restructuring was proposed to reduce reliance on the airline industry after pandemic-related losses, diversify into digital, fintech, logistics, and lifestyle businesses, improve operational efficiency and financial strength, and enhance shareholder value and investor confidence. Based on the timeline, January 2022, Capital A Berhad changed its name from Airasia Group Berhad, and later in 2023, Capital A announced the disposal of its aviation business to Airasia X Berhad, and afterward, Capital A continued expanding its non-aviation businesses.
Okay, we continue for analysis and discussion. First, I will discuss Capital A PN17 turnaround and exit strategy. Due to the COVID-19 pandemic, Capital A experienced significant losses and its aviation business was classified as PN17 company. Capital A do restructured its business and success officially exit PN17 status on 20 May 2026. Next is the strategy share swap transaction. Instead of selling its aviation business through a cash transaction, Airasia X acquired Capital A aviation business through a share swap arrangement. In return, Airasia X issue new share and assume Capital A debt. The third point is equity exchange and unlocking shareholder value. Instead of keeping this share, Capital A distribute them to its shareholder through dividend in spice arrangement. This allows shareholder to continue benefiting from the aviation business by directly owning Airasia X share and unlocked shareholder value. Finally, Capital A now able to focus on its core digital pillar. After splitting the aviation business, management can concentrate more on developing its digital ecosystem such as BigPay, Teleport, and Move Digital. This strategic focus allows the company to allocate resources more efficiently, explore new growth opportunities, and create sustainable value.
Here, I will present three key financial ratios for Airasia and Capital A from 2020 to 2023. First, the current ratio it fell from 0.3 in 2020 to just 0.16 in 2023, and it never reached the benchmark of 1.0. This shows that short-term assets were consistently efficient to cover liabilities. In practice, the company faced constant cash flow pressure and had to rely on external financing. Next, the net profit margin in 2020 and 2021 margin was severely negative at negative 188% and negative 203%, reflecting the impact of COVID-19. Loss narrowed in 2022 to negative 51%, and in 2023, Capital A finally recorded a positive margin of 2.3%. Although modest, this marked the first return to profitability since restructuring, supported by recovering demand, cost control, and diversification into logistics and digital service. Finally, the debt to equity ratio. It remained negative top out due to accumulated loss and shareholder deficit. In 2022, it was extremely high at negative 6.5, improved to negative 3.1 in 2022, but slipped again to negative 3.7 in 2023 as debt increased. This highlights that while profitability has returned, the capital structure is still fragile, and reducing debt will be critical for long-term sustainability. Overall, this ratio show a company moving from crisis toward early recovery, but still facing challenges in liquidity and leverage.
To conclude, the restructuring of Airasia Group Berhad into Capital A Berhad has been a significant strategic transformation. The company successfully shifted from being primarily an airline operator to becoming a diversified investments holding company with businesses in aviation, logistics, digital service, fintech, and travel technology. This restructuring reduced its dependence on airline revenue while improving operational efficiency and creating new opportunities for future growth. From our financial analysis, although Capital A continues to face challenges in terms of liquidity and leverage, the company has shown encouraging signs of recovery. It returned to profitability in 2023, strengthened investor confidence, and successfully exits PN70, demonstrating that its turnaround strategy has been effective. Therefore, we conclude that the restructuring has largely achieved its strategic objective and enhanced shareholders' value. Moving forward, continue focus on debt reductions, liquidity management, and the expansions of its non-aviation business will be essential to ensure sustainability long-term of growth for Airasia Capital A Berhad. That's all from us. Thank you.